For decades, the U.S. dollar has been the backbone of the global financial system. Whenever markets faced uncertainty, wars, recessions, or financial crises, investors around the world rushed toward the dollar. It became the default safe haven, trusted not just by individuals but by governments, central banks, and global institutions. The dollar wasn't just a currency anymore. It became a symbol of stability and economic power. This dominance didn't happen by accident. After World War II, the United States emerged as the world's strongest economy. Through the Bretton Woods system, the dollar was tied to gold and adopted as the primary reserve currency. Even after the gold standard ended, global trade, oil markets, international debt, and financial contracts continued to rely on the dollar. Once the system was built around it, the dollar's position reinforced itself year after year. Because everyone used the dollar, everyone needed the dollar. Central banks held it in massive reserves. Corporations borrowed in dollars. Commodities like oil were priced in dollars. In moments of global fear, capital naturally flowed into U.S. Treasury bonds, strengthening the currency even further. But today, that unquestioned dominance is starting to face serious challenges. The global economy is changing, and investors are beginning to ask an important question. Is the U.S. dollar still the safest and most powerful currency in the world? Or is the financial system slowly preparing for a future where the dollar no longer stands alone at the top? One major concern is America's rising debt and long-term fiscal pressure. The United States carries trillions of dollars in national debt, and servicing that debt becomes more expensive as interest rates rise. At the same time, other nations are actively trying to reduce their reliance on the U.S. dollar. Countries like China and Russia are increasing trade settlements in their own currencies. Interest rates play a powerful role in this story. When U.S. rates rise, global money flows into dollar-denominated assets because they offer higher returns. Inflation is another critical factor. When inflation remains high, the purchasing power of any currency slowly erodes. If investors believe inflation will be persistent, long-term confidence weakens. Technology is quietly changing the rules as well. Digital payment systems, blockchain networks, and central bank digital currencies are making cross-border transactions faster and cheaper. While these innovations haven't replaced the dollar, they are slowly reducing its advantage in global payments, one of the key pillars of its dominance for decades. So what does all of this mean for investors? First, it means the era of blind trust in a single currency is ending. Smart investors now think globally. They diversify not just across stocks and bonds, but across regions, currencies, and asset classes. In the end, the U.S. dollar is still king, but it no longer rules unchallenged. For those who understand these changes early, currency trends are not a threat. They are an opportunity. Because in global finance, the investors who recognize change before it becomes obvious are the ones who stay ahead of the game.